What's up, guys? Today we're looking at the dogs, the absolute dogs of the stock market. What is a dog, you ask? A stock that never goes up. And in fact, all it ever does is go down. So, what type of masochist would call themselves a dog lover? We'd have to have a track record of identifying undervalued positions that, hey, eventually sellers run out of ammunition. And when the sellers all disappear, all that's left, in theory, would be buyers. This gives you an asymmetric risk reward profile because when the positioning is offsides and when shorts have to cover, eventually you start to get a rally that can sustain itself. Then, hey, price starts to drive the narrative. The fundamentals start to improve. The technicals start to look better. You get a rally, and this dog starts to outperform the broader market. So in this video, we're going to look at some dogs. We'll do a callback to some dogs I found in July that a lot of them did very well. We're going to take a look at that. And importantly, you got to remember this too. This is not me saying that the stock market is overvalued. This is not me saying that these are buys or that these are sells. This is if a client were to come to me and say, I think I think the market is overvalued for these reasons. I think the growth trade is starting to get a little bit cooked. I think tech and hypergrowth is not the area I want to focus on now. So let's look at some healthy balance sheets with the opportunity to recover fundamentally and technically. So I would say, okay, you want to find some dogs. We would put in some measures to protect the downside. We would adjust the portfolio accordingly. We would manage our risk. We would figure out our entry points and our exit. We would we would model this out. It would be a whole mathematically modeled proprietary system to build this portfolio. So there's no such thing as a buy rating because that just doesn't exist. Okay, so hold your horses, not financial advice, all of that. But let's look at some dogs that I think, in the right context, could be some dogs that begin to outperform. Call back to this thread that I did on July the 10th. I was at the time I was saying I'm not buying these yet because I was waiting to see some technical things begin to form. But let's just look back here. So PayPal, we were looking at it around $58.90. We wanted to see it perhaps climb back over the weekly 8 as an entry point. Um, okay, we don't have to look at all the charts, but let's just look now. So how do we get with PayPal if we did get in? Let's say we eventually came back in, let's say on July 24th, just as an example. We could have caught about a 50% rally there. Not too bad. SoFi was another one. We were looking at this bullish wedge forming on declining volume. We were at $6.57 at the time. How good of a move did we catch in SoFi? Well, this was not bad at all, good sirs and gentlemen. We got in here for more than 100% move in SoFi. Some of these we did not nail. Starbucks we did good. We wanted to see it hold the 72 level. This was matching up if you went all the way back to one of the COVID lows as well. Um, we got out of this position, but we did ride it up for, remember, this was that box we were looking at the time. We rode this one up. I think we saw it hold. I think we probably got in probably on this retest. It's probably if I had to guess, just without checking my notes, like a 30-40% move there. Like I said, not all of them performed. I think Nike was an interesting one because we saw it hold down here on 72. And I've got to talk about Nike because Nike's on the list again because this has been a very interesting move. It did what we thought it was going to do, and then it also came roaring back down. So, okay, I zoomed out too far. I don't know what I'm doing here. Let's see. So we rode this one up when it held this like 72 level. Almost, did we touch 100? No, we got to like 91, 92. So we got like a 25% move, and now we're coming back down. And I think this dog is ready to get back up there again. But Nike was one that was interesting. Lululemon, we ended up getting into a position around like 260, I think. We've ridden this one up to like 320, 330, and that's been a good trade. There are a few that did not work out though. So Pfizer is an interesting one because Pfizer's on the list again today. We're looking at like sort of this misshapen diamond at the time, but Pfizer's getting killed, man. And now it's got all this pressure on it because RFK Jr. is going to make the world healthy again, and Pfizer's on this like hit list for. I don't want to get into like all the politics of it, but man, this thing is getting killed, just absolutely killed. And like, imagine this one does start to turn around. You're getting what, like a 6% dividend in this stock right now? Um, I mean, do we really think this stock is dead? It's all-time high up here above 60. We're looking at like 2 or 3x upside in this one. That's I mean, it's interesting. It's certainly interesting. So we're interested in China as well. We rode China up. China similar to Nike actually, where it got this mega bounce. This was like 17.6 at the time when the Hong and the Seng. We got up to like 22, 23. It was like a 30, 40% move. Disney, and then I should mention that it has come back down. So Disney is another one that has been challenged. And Geo was not a dog, but I put this one on the list because I was saying, watch out for the long jail play, because there was some confluence to suggest that we were going to get some hard on crime type of moment, politically speaking. And boy, did we. Um, so this is pre-election, October 1st. Post-election, we've now got more than 100% move, 130%. I mean, that's not a dog. That's just an interesting setup there. So let's see. There's McDonald's in there, and then this was the important thing: is what you're doing with a dog is you have this stage 4 downtrend. This is the dog period. Then this is why they start calling them dogs. They have these moments where they just go up and down, up and down, up and down, and they just never go anywhere. And then people give up because they're like, suckers rally, fine. I just want to get out. I want to recuperate. I want to put this money elsewhere. And that's when they start to rip, right? When people start to lose patience. So this is the dog mentality. You're looking for breaks to the upside after a stage 4 downtrend, stage 1 Wyckoff accumulation. You want to ride up stage 2. You can hold out during stage 3, and then eventually when we break to the downside, you sell, and you can rinse and repeat. That is the case for looking for dogs. Dog number 1 is Nike, getting a 5-star rating from Morningstar with a fair value estimate of $117. You got to take these things with a grain of salt, but 5-star rating with a fair value estimate all the way up there, you got to think some upside would be reasonable to expect. Let's take a look at the bullseye. Uneven of late. Global sportswear markets should expand, especially in Asia and other developing areas. The leader in most countries, Nike is positioned to benefit. Okay, so bullish on the world with an economic recovery. Places like India, China, for example. And we got a generational superstar like Caitlin Clark signed to the brand. Bears say, worldwide business, Nike has felt the effects of issues like the war in Ukraine, shipping delays, currency volatility, blah, blah, blah. So, I mean, international brand, one of the best in the world at what it does with a ton of cachet. You would think that that gives it quite an economic moat. Just for some other perspective, CFRA, slightly less of a target with an $89 target from around 76, but even that is a good like 10, 20% upside. So if you think the market is going to be flat, then hey, by definition, that is outperformance. What do you want to see on the chart? Well, this mega trend that we had bounced off of before, so what is that, around $74? That might be a decent entry point if you want to try and snipe a potential bottom. But really, you just want to see it start to climb up above these daily EMA patterns. Here's the 8. We rejected the 8, the 14, and the 20. Those are my near-term EMAs. 50, 100, and 200 are much higher up there. A lot of gaps left behind as well, so don't need to necessarily be in a hurry to get in here, but starting to look pretty attractive, especially if we can bounce with conviction off of a mega trend and start to recapture some of the EMA ribbon. Here you can look at this RSI divergence starting to get a little bit of a bullish indicator there, starting to cross up on the MACD, maybe starting to get a buy signal. But yeah, I don't have to be in too much of a rush here, but certainly starting to like what we're seeing on the charts, and we believe in the growth story and the comeback story here. Next on the list is Pfizer here, also clocking in with a 5-star Morningstar rating. Last price has not been updated for a couple of weeks, so it's below 25 now. I'm looking at a $22, $23 support level on the chart. Fair value of 42, so we've got Serious upside, more than 50% of the upside at this point. $153 billion market capitalization. So they've got some capital to work with if they can start to improve an item or two. It's competing against Eli Lilly, which Morningstar is saying is overvalued. Merck, GSK, a couple of other folks in the healthcare space. The big thing is people think there's going to be backlash from the pandemic, or that RFK Jr. is going to be able to come in and reshape the entire healthcare sector. I'm not going to get into the politics of that, but I would say I would describe myself as skeptical that he's going to get everything accomplished. In the same way, I think if Bernie Sanders had been elected president in 2016, I don't think America would have become a socialist country because one individual just, good luck, good luck radically changing the system. But let's say he is successful, then I mean, Pfizer, if they play ball and they reposition themselves, then I think a comeback is possible. CFRA, a more sober outlook, $30 market price 12 months from now. So, yeah, I mean, even from 25 to 30 is, what is that, 15, 20% upside. So even that doesn't look too bad. Let's look at a chart here. So getting killed, RSI getting killed in deeply oversold territory. And I mean, we can hardly go much lower on the MACD signal. But what would you be looking for? I mean, where is a good entry price? I mean, you'd have to really start to go back and back and back to say that definitively you know where support is going to be found here because we're just really, really, really a falling knife at this point. I mean, you'd have to go back to when? When's the last time we were down here? Was that 2015 when we were at the $23 price level? I mean, wow, that is crazy. So, I mean, with as it goes in the falling knife world, well, that's where my shape-shifting diamond was drawn previously, and now we've broken down past this box. So, like I was saying with Nike just a moment ago, I'm not necessarily in a hurry here to get in, but holy cow. I mean, at some point, this thing is going to need to turn around. It's very, very far below the EMA ribbon. So don't need to be in a hurry. This one's paying you like 5 or 6% dividend. If we start to bottom around 20, 21, 22, this thing has massive upside if it can become even like half as good of a company as it was in the past several years. So, hey, you do you, baby. But this one is certainly on my watch list, as it was in July. So it just goes to show these don't always turn around quickly. But if we start to see some improving technicals and fundamentals, another one for the Dowg watch list. Before we look at our next Dowg here, the US versus global equities. Look at how far above we're getting. The Nifty 50 bubble in the 60s, the internet bubble from 2000, dot-com era. Look at us now. We're almost three standard deviations above. I mean, US exceptionalism. I'm a proud patriot, so hey, I love to see it. But this is crazy. I'm not saying that this data necessarily has to revert to the mean, and certainly not in the short term. But this is crazy. It's enough to get you to think, hey, maybe I should rotate some of my profits out of US equity somewhere internationally. So you start to look around, and I'm sure this is going to come up for a lot of people. Alibaba now is what, 82, 84, 88? I can't remember where it closed. It's not 84. I think it's 88. Anyway, fair value of 100. So, hey, that's not too shabby. That's another 15, 16, 17% upside from 85. But if it's at 88, what is that? Only like 13% upside. Still not bad. The bullish case, able to maintain or increase gross merchandise volume shares in China's e-commerce. So you're betting on China to recover. Successfully increases key metrics such as customer retention, purchase frequency. Their balance sheet looks good with EBITDA. They're buying back a ton of shares. They've got some expansion into AI and other services. The bearish case, gross merchandise volume share in China decreases faster. There's a lot of competition in China. There's the political stuff, expansion into the non-physical goods marketplace, and blah, blah, Alibaba fails in globalization, public cloud. Okay, so yeah, I mean, getting eaten up by companies like Google or whatever. I don't know. We'll see how that all plays out. But if China is going to recover, then Alibaba is poised to be part of that recovery. That's just the way things work. It's like saying the U.S. economy is doing fantastic, but Amazon's share price is getting killed. I'd like to see the world in which that happens because I'd need to see it to believe it. CFRA, $105, 12-month price target, so not bad. Now, we got to get into the chart because everyone loves to talk about these tariffs and how Trump would be so bad for China. Well, my big circle here is right around the time Trump got elected last time. 2016, 2017, he gets sworn in. And around the end of his presidency, Baba's about a 4x from his 4-year term. Now, is it just me or does the chart look similar in terms of how we're setting up into Trump round two? I'm just gonna leave it at that. Now, in terms of a technical entry point, we have we roared up. Look at this inverse head and shoulders. Look at how the way that played out. That was beautiful when we got that in July. We rode it to the top. I believe I sold my Alibaba shares between 107 and 113. And there was like a few days there where it kept going higher. It went to like 120 and had this extremely bullish hammer candle that got pinned at like 118. And I was like, wow, I shouldn't have sold my shares. But as it goes with these things, it was not a bad trade. Now, bouncing here on the 200-day, it's starting to look like a decent entry price here. Uh, I'm not gonna believe this whole tariff and geopolitical story until I don't know. I think if we lose the 200-day, maybe ease off. But if we're gonna bounce here, that's not a bad looking chart. Bouncing on the 200-day, hopefully start to reclaim some of these EMAs. But it's a dog, so you don't necessarily have to be in a hurry to get into that trade. These last two are some serious dogs. Looking first at Boeing, which is in the 100 out of 100. That's not a good thing. 100 is the worst score you can possibly get in the Schwab equity rating. Strongly underperform. Rating of an F, an absolute failure. Dog. But from Morningstar, and now we're at 140, so we've even fallen from 151 when this was rated. Fair value estimate of 191, so $51 of upside from the 140 price range is like solid 30-40% upside. Uh, Dog. CFRA has a 12-month price target of 126, so that is more than about a 10% downside from the current price. So, and it's a sell rating. I don't know. I don't know enough about Boeing fundamentally to say, like, here's what they're going to do to improve. I mean, their planes are just falling apart. I don't know what these guys are doing, and they seem to they seem to be losing to someone like Elon Musk and SpaceX, if especially with Elon's relationship to the current or to the new administration. I don't know, man. This is not one I would be in a hurry at all to get in. But this one at one point was above $400 per share. And this is what, around like 120, 125 range? A giant, giant support level. If we came down to this like 120-ish level, somewhere above 100 here, and we started to bounce or we saw a bottom wick and we started to see this RSI start to improve, then it might be worth taking a flyer just because is Boeing really going to go bankrupt? I mean, at what point would you throw in the towel here? Like if Boeing were to go below like $100 a share, would you just say to hell with it? Boeing's going to go bankrupt? I mean, that's crazy to think about. Anything is possible, but I don't know. These iconic American brands that have had such historical, lengthy ties to the government are like, really? They're not going to go bankrupt. So if this were to come back down, let's say we get this 120 bounce here and it starts to improve, then that's really an interesting one. But man, I've said this a lot of times, I'm going to say it for the next one too. Not in a hurry to get in, but imagine if this one does come back and we can retest all-time highs. We're looking at a 3 or 4x from here. On the subject of Chinese economic recovery, we would have to look at oil and the energy markets more broadly. Here is the net positioning with regard to the oil trade, about as low as we've been in the past 10 or 15 years. So positioning is net short, pretty dramatically. It's a perfect dog setup because you have your short covering, then you have your repositioning, then all the fund managers that are underweight need to get back to target weight. So pullbacks start to get met by bull demand, then Price drives narrative. Economics, fundamentals, technicals all start to recover. The retail crowd starts coming in. And this is how you get a sustained rally. What was once a dog becomes an outperformer. How do we want to play this? Well, there's a lot of different ways to play it. I'm just going to look at Occidental because it's easy to talk about a stock when Warren Buffett has been accumulating. He's smarter than I am. He's better at this than I am. So if I'm wrong, then we can at least say, hey, at least we got a better entry price than the Oracle of Omaha because he's been buying since like $60 a share. We're below $50 a share. So you could get basically 20% better entry price than Warren Buffett getting in now. You're getting in at 49, fair value estimate of 62, about 20-25% upside from the current price. You can't be too unhappy with that. It is what is the rating again? A 3-star, fairly valued. I don't know. I think it's starting to look pretty undervalued relative to Devon Energy, Marathon Oil. Occidental, their CEO is pretty keen on the Trump administration and the policies for the market. Occidental does have its own moat with carbon capture and shale and other petroleum products that they have a pretty monopolized position in the Permian Basin. Well, let's see. Dominant position in the Permian Basin. Oh, that's what I just said. Cheapest source of production in the U.S. Conventional assets in the Gulf of Mexico and Middle East complement its shale operations. Low carbon ventures segment synergistic with the chemical business. So they're getting into like renewables, alternatives, and that sort of thing. The story looks pretty decent. Let's take a look at the chart. Well, we'll come back to that one. The thing I think that is important to look at here is when we nose dove off a cliff with the COVID low. We were around 43. We're up to like 47 or so here. We lost it, and then we were in free fall. Oil was negative dollars per barrel. So you might be bearish. You might think we're going to have a global recession. But even in that circumstance, I don't think we'll retest COVID lows because I don't see a situation where oil is negative again. I don't want to be proven wrong. Anything is possible. But let's just say we're going to hold where we lost it before. Like maybe we have this zone here between like low 40s. It's hard to imagine us getting down there. If we did, I think that'd be a great entry price. And then you could just set your stop loss. Like if we're going to go into global recession and oil is going to be negative dollars per barrel, fine, take the loss. But here, we're trying. We're flirting with this EMA ribbon. If we can reclaim the daily 8 or get above this daily 20, then you got to like your chances there. So it's a dog, EMA ribbon. We're surfing it to the downside. Don't need to be in a hurry, but starting to get an interesting setup here. Well, let's look at the RSI and the MACD. Yeah, they're pretty dramatically oversold. They look terrible. So yeah, you don't need to be in a hurry. But if you start to see any recovery, you start to see a reclaim of these near-term daily EMAs, not looking too bad. And if this trade goes sideways, still better entry price than Warren Buffett. These last two are some serious dogs. Looking first at Boeing, which is in the 100 out of 100. That's not a good thing. 100 is the worst score you can possibly get in the Schwab equity rating. Strongly underperform. Rating of an F. An absolute failure. Dog. But from Morningstar, and now we're at 140, so we've even fallen from 151 when this was rated. Fair value estimate of 191, so $51 of upside from the 140 price range is like solid 30-40% upside. Dog. CFRA has a 12-month price target of 126. So that is more than about a 10% downside from the current price. So it's a sell rating. I don't know. I don't know enough about Boeing fundamentally to say, like, here's what they're going to do to improve. I mean, their planes are just falling apart. I don't know what these guys are doing. And they seem to they seem to be losing to someone like Elon Musk and SpaceX, especially with Elon's relationship to the current or to the new administration. I don't know, man. This is not one I would be in a hurry at all to get in. But this one at one point was above $400 per share. And this is what, around like 120, 125 range. A giant support level. If we came down to this like 120-ish level, somewhere above 100 here, and we started to bounce, or we saw a bottom wick and we started to see this RSI start to improve, then it might be worth taking a flyer just because Boeing is Boeing really going to go bankrupt? I mean, at what point would you throw in the towel here? Like if Boeing were to go below like $100 a share, would you just say to hell with it? Boeing's gonna go bankrupt? I mean, that's crazy to think about. Anything is possible, but I don't know. These iconic American brands that have had such historical, lengthy ties to the government are like, really? They're not gonna go bankrupt. So if this were to come back down, let's say we get this 120 bounce here and it starts to improve, then that's really an interesting one. But man, I've said this a lot of times, I'm going to say it for the next one too. Not in a hurry to get in, but imagine if this one does come back and we can retest all-time highs. We're looking at a 3 or 4x from here. Okay, last one here. A lot of really intelligent people in the energy space and just really intelligent people in general have made the case to me about the renewables, the alternatives, and the solar revolution. I've seen some of the numbers. They're extremely compelling, but I'm the wrong guy to make that case. I don't know. I stay away. But I start to see a $75 fair value estimate for a stock that has lost the $60 level, and I start to say, okay, put that dog on the watch list. So I don't get it, but um, let's read what Morningstar has to say. So Trump victory puts clean energy incentives in the crosshairs. So yeah, I mean, I don't know. I guess this would have done better in a Kamala administration or with a blue House or Senate. I don't know. It's a market. Things that are valuable are going to get priced in that they're adding value. So hey, I don't get it. But let's look like what is the bullish case? So they command industry leading gross margins and return on invested capital, high tech product offering, serves a growing rooftop solar market with an expanding total addressable market, potential policy incentives to address climate change and da da da. So yeah, if you buy into that, or if you think it's possible, or if you think that's going to come back at some point and it's going to get oversold in the interim, then sure. The bears say Enphase's end markets are concentrated around the U.S. and residential end markets. Potential for current policies in the U.S., for example, net metering and fixed customer changes to be altered. Fine. So I guess this is about political stuff. This is about subsidies. This is about the whole um, renewable world, this whole climate change initiative. So I could certainly see a case for someone to being like, hey, it's all nonsense. We got a red wave with the political outcomes. I'm staying as far away as I possibly can from this industry. I don't blame you. I am certainly not making the case. I'm just saying this dog from a price perspective, there looks to be some upside. CFRA, which usually has a pretty sober outlook, offering an $82 12-month price target. Well, let's take a look at the chart then. So, again, another one deeply oversold on the RSI, looking pretty terrible on the MACD with plenty more downside to go. A real falling knife type setup here, so don't need to be in a rush. From the top here, around $338 to where it is currently priced, down 82%. Dear Lord. Whereas if you were to retest the previous all-time high from this $58 to that, you're looking at a 480% gain. So you don't need this one to go back to its all-time high. You need a bounce, a dead cat bounce, whatever it is. I don't know if you're going to get it in the near term, but let's see. What would you want to see? The Chaikin looking like it tried to bounce there and then got smacked. This daily 8 EMA is around 65, $66. So you want to start to see some curling. You want to start to see this guy turn around. Maybe it does. Maybe you want to see it reclaim this EMA ribbon. That's probably what I would do if I was going to play this. Certainly not going to be in a rush to get in, but let's say it recaptures this. So we saw it up here. It tried and it failed. It filled this gap. So maybe if we got above the 20-day EMA, I would play a bounce from the 20 to the 50, for example, because you've got this little bit of a Jaws pattern. So even there, let's say we got above the 20 and we retested the 50. It's an 18% move. Not super unreasonable to expect something like that to happen. But there you go. What DAOGs are you looking at? What have I missed? What do you think? Let me know in the comments. Good luck out there.